This is a really tough headline a few weeks before they're going to report earnings again, because I think Steve just said 55% of Apple's sales really are iPhone. And when you think about it, in the last quarter, they just reported less than 70% of their sales were PCs. They gained a lot of market share over the last few years. I think that's probably the better part of the story for Apple. And if they're losing or they're coming down year over year at mid-single digits or something like that, it's not that big of a deal. I mean, down 40% year over year. But if you think about it in market share terms, it's not that big of a number, especially relative to the revenues. All that being said, if you think about the rest of the supply chain that goes into the smartphones, these are very similar supply chains, and all the stuff that we're going to talk about with Taiwan Semi and Samsung, that's probably a bigger issue for the smartphone business. And those are the things that are really going to drive the stock here. So this is a tough headline to trade off of, in my opinion, weeks before the earnings report.
Yeah, we're not trading Apple on MacBooks. I think that's what Dan's saying. I get it. We knew where PCs were going to be. We knew where Apple really has pulled forward a lot of demand. But it's really more, I think, on iPhones. It's on services. And the question for Apple, which has outperformed the S&P by 8% even after this pullback today since the beginning of March. So we're talking about, is this a big day for Apple? I mean, when you consider the outperformance, I think the reaction was probably in line as expected, maybe even better than expected. I think it's really just about the pull forward. But I want to watch services. I want to watch the parts of the annuity business, because it gets back to, should you be paying the same multiple for Apple today, or in some cases, a slight discount because I think they are growing earnings than you were a year and a half ago? Absolutely not. And that's a world where also Apple did a lot of great things with financial engineering. They did a lot, they issued long bonds. They paid back more stock. So again, I think this isn't a crazy app. It's part of the stew. It's a piece of the mosaic, but it's not to trade off.
I like that stew and mosaic in the same sentence.
So spicy,
going on there.
Wasn't it?
Panache, and throw all that in. In terms, though, of Tim mentioned the annuity business, should we regard services as an annuity business when the macro is a little dicey? I mean, are people really going to renew every single app, every single service that they've been buying on their iPhone when they're trying to cut back?
Quite possibly not, but that is going to be stickier than people pushing off buying new iPhones. I think that's a lot easier to do. I mean, it takes us months for us to cancel our subscriptions. I think a lot of people know that, unfortunately. And I do think when you look at Apple, we've talked a lot about is the valuation justified right now? And I think bigger picture, it's not just Apple that you want to look at. When you look at the mega cap 8 right now, the forward PE of those is about 28 times earnings, where if you look at the S&P 500, it's about 17 times earnings. But if you strip out those 8 companies, it's only 15 times earnings. So talk about how expensive these companies are. And I think this earnings season, that's really going to come to light. And later this year, it's going to become more and more important for you to really look at valuation. These things are very still expensive.
But Guy, these are supposed to be defensive. They've got cash on their balance sheets. This is where you want to be. Nobody's going to give up their iPhones, even if times are tough, right?
Yeah. It's a good thing that Apple and Microsoft are not a big part of the S&P 500. Otherwise, we'd have a problem. No, I love that sound in your voice. You're trying to wind me up here on a Monday. I'm not going to take the bait, but I will say this. I mean, this speaks, in my opinion, it doesn't necessarily speak to Apple necessarily, but it speaks to global demand for different very high-priced products. And are we in an environment where people are going to pay up? Or are they just going to say, you know what, my old iPhone is fine, my old PC is fine, and they're not going to do that upgrade cycle that everybody talks about. And in that environment, Apple trading at 26 times next year's numbers with, again, mid to single-digit revenue growth, mid to single-digit EPS growth, declining margins, albeit strong margins, but declining nonetheless. It just doesn't make sense. By the way, the stock was $125, 3.5 or so months ago, stopped at a level we thought it could get to, and we've bounced nicely. It bounced a lot more than I thought. But this stock, if you look over the last year and a half or so, has been, Melissa, upper left to lower right.